Now to the all-important really read on the U.S. consumer. U.S. retail sales rose substantially in March on a jump in car purchases and other goods, such as electronics, suggesting consumers were scrambling to get ahead of tariffs. Maybe you buy a car, you buy a car, you buy a car before those prices go up.
You buy an iPhone, you buy an iPhone.
Maybe. Silvio Tavares is president and CEO at the credit data and credit risk analytics firm VantageScore. He's back with us here in the Bloomberg Businessweek studio. It's a joint venture of Experian, Equifax, and TransUnion. Good to see you this afternoon. Just an easy question for you. How is the consumer doing?
Consumer's healthy. You know, we look at consumer health from a credit score perspective. A perfect Vantage score is 850. A really bad Vantage score is 300. Through the end of March, Vantage score average was 702.
How does that relate to other times in the last 4 years, let's say?
Well, that is high, and in fact, it's 1 point higher than last month. So it actually increased, which was a big surprise. You would have expected, with all the headlines that you've been covering, that actually the consumer would not be credit healthy. We actually saw the opposite. Very positive.
Well, you know, it's interesting, too. And I guess what I want to ask you, I know you've been there for a couple of years, but I think VantageScore goes all the way back to 2006. And there's just been a few things that have happened in that time. We've had the great financial crisis. We've had the COVID shutdown. And here we are today. So I am curious, when you throw these numbers out, how does it compare to other moments of crises?
Yes. So the real insight here is that the consumer does not feel crises. This is a Main Street versus Wall Street dynamic that we're seeing through the end of March. Main Street consumers feel credit healthy. They actually have a higher credit score. We saw actually consumer payments, so the late payments, credit delinquencies across every credit product, auto loans, credit cards, mortgages. All of those delinquency rates improved compared to February.
I got to push back on this Wall Street versus Main Street part of this, because we kind of saw proof with the UMich survey that we got, the results that we got on Friday, that this is bleeding into Main Street. Just to go over these numbers, year-ahead expected inflation at 6.7%. That's the highest going back to 1981. Preliminary April consumer sentiment falling to 50.8. The estimate was for 53.8. Our team called it ugly in terms of results. That seems to be hitting consumers.
This is where the difference in data makes a big difference. Consumers, what they say on a survey, like the one you just mentioned, and how they actually behave, which is the data we collect on their actual credit cards and other payments, there's a big difference. And what you see through the end of March, and this is the early view on the data that we're providing exclusively to Bloomberg, is that consumers feel confidently cautious, right? So they're paying down their credit balances. Credit utilization actually declined. They're actually working hard to keep up on payments. Credit delinquencies across all products actually declined on a month-over-month basis. So consumers are cautiously confident. What happens next, of course, is the big question. But what we can see is, through the end of March, banks actually reduced their new lending. So banks are concerned, no question about it. Consumers are not as much.
So, Silvio, are consumers paying more on balances? Like, is the activity picking up? And I just wonder if it's anticipation of, like, things could get a little rough. Let's pare down our, let's cut down on our balances.
Yes, that's exactly what's happening. Consumers are actually paying more on balances, which
plays into what Tim was talking about, sentiment. If you're worried about the future, you might work on your balances, your credit balances.
Yes, and just to be clear, you'd have to be living under a rock not to perceive higher risk. But the reality is consumers do feel confident about where they are and their credit healthy. Now, an alternative, Carol, you talked about what's happened in the past. If you look back at the 2008 crisis, what you saw there is a different behavior. Credit balances spiking significantly, and at the same time, delinquency spiking. We're not seeing that right now. In fact, it's the opposite. Balances are being managed well, and delinquencies are actually improving rather than getting worse.
How real-time is your data? You're sharing data with us from March, but so-called Liberation Day was April 2nd, and that was the day that caught everybody off guard. We can just look to the market reaction for proof of that. Do you have access to the April data yet?
We look at the data on a very regular basis, and the data, we have the most comprehensive and most frequent data. VantageScore CreditGauge is published every single month. We're the most definitive source out there because we score all consumers.
All right, so cut to the chase. We have a minute left. What's the data showing you in real time?
Well, the data is showing us that this continued healthy credit behavior is continuing through the early part of April. But look, the reality is, as you heard in Chairman Powell's statements, there's more risk risk than there has been before, in part due to tariffs. Consumers see that as well, and they want to be well prepared for any new risks that can come.
So delinquencies aren't going up, or any of the activity that you saw in March, it's kind of the same thing you're seeing?
That's exactly right. And we're going to continue to monitor that, and I'm sure you'll have me back next month to talk more.
Silvio says everything's awesome.
Well, he said cautiously optimistic.
Exactly.
Cautiously awesome.
Exactly right.
Cautiously awesome. I like that.
Yeah.
Listen, thank you so much. Love looking at data and getting an idea of what the consumer is doing. So important to the economy. Silvio Tavares, he's president and CEO at VantageScore, of course, the credit data and credit risk analytics firm, joining us right here in studio. Silvio, thank you.